Hi. Let's learn about different types of lots in financial trading. In the world of securities trading, a lot refers to the number of units of a financial instrument that have been bought on an exchange. For example, in the stock market, a round lot is typically 100 shares, but investors can buy any number of shares, which is also referred to as a lot. An odd lot is the term used when fewer than 100 shares are bought. Investors and traders use lots to purchase and sell financial instruments in the capital markets. Historically, a round lot for stocks was 100 shares, but with the advent of online trading, odd lots and mixed lots have become more common. Odd lots represent orders for less than 100 shares, while mixed lots are a number of shares above 100 but not divisible by 100. The round lot for exchange-traded securities such as ETFs is also typically 100 shares, similar to stocks. When it comes to the bond market, institutional investors buy debt from bond issuers in large sums. The round lot for U.S. government and corporate bonds is considered to be $1 million in some circles, but it can also be $100,000, as is the case with municipal bonds. In the options market, a lot represents the number of contracts contained in one derivative security. For example, one equity option contract represents 100 underlying shares of a company's stock. The lot for one options contract is always 100 shares. Standardization of options contracts allows investors to easily assess what price per unit they're paying, making the process more efficient. In the futures market, lots are known as contract sizes. The underlying asset of one futures contract could be an equity, a bond, interest rates, a commodity, an index, or a currency. The contract size varies depending on the type of contract being traded. Futures contracts are typically fixed and non-negotiable, unlike stocks, bonds, and ETFs, which can be purchased in odd lots. When trading currencies in the forex market, there are micro, mini, and standard lots. A micro lot is 1,000 of the base currency, a mini lot is 10,000, and a standard lot is 100,000. It's possible to exchange currencies at a bank or currency exchange in amounts less than 1,000, but the smallest trade size is typically 1,000 unless stated otherwise by a foreign exchange broker. The decision to invest in bonds or stocks depends on an individual's goals. Stocks might be more appropriate for long-term investments, while bonds tend to be safer in the short term. However, stocks are generally expected to outperform bonds over the long term. In forex trading, a lot refers to the quantity of the base currency being traded. Micro, mini, and standard lots represent different amounts of base currency, allowing investors to tailor their trades to their desired level of exposure. Futures are contracts to sell or buy a security at a future point in time at a price established at the time the contract is entered into. The underlying amount that a futures contract controls is fixed based on the contract size. Trading in lots varies depending on the type of financial instrument being traded. While stocks, bonds, and ETFs can be purchased in odd lots, options and futures typically have fixed and non-negotiable lot sizes. The importance of lots depends greatly on the investment strategy and goals of individual investors. Here are 4 key takeaways. 1. A lot is the number of units of a financial instrument that's traded on an exchange. 2. A round lot is 100 share units for stocks, but any number of shares can be traded and also referred to as lots. 3. A bond lot can vary. They're sometimes $100,000 or $1 million, but face values that individual investors can purchase may be as low as $1,000. 4. A trader can buy or sell as many futures as they like, but the underlying amount that a contract controls is fixed based on the contract size. Hope this would help. Thanks for watching.